I've spent countless hours studying our corrupt monetary system. After watching this video, you as a beginner investor will now have a clear understanding of our corrupt monetary system and what you need to do to secure generational wealth for you and your family. Let's start off with currency versus money. This will give you a clear understanding of what currency actually is. Currency will need to follow these 6 principles to be considered a true currency. A true currency needs to be a medium of exchange, something that the buyer and seller can exchange with one another to make purchases. The second principle needs to be a unit of account, a numerical means to compare the value of goods and services. Our third principle is going to be portable. That means that we need to have something to where it's able to move from place to place. Our fourth principle is going to be durable, something that is strong and can last a long period of time. Our fifth principle is going to be divisible, something that can be broken down into smaller units of account. For example, the same way that a dollar has 100 pennies, that's going to be divisible. Our sixth principle is going to be fungible, basically saying that $1 in my pocket equals the same amount as a dollar in your pocket. Now we're moving on to what classifies a true money. It must follow all these exact same principles, the same as currency. The only difference is that a true money must also be a store of value, something that retains purchasing power over long periods of time. And this is exactly where the US dollar runs into a problem. Now remember, this depiction between currency versus money will give us a clear understanding of what makes our money that we use today broken. Now if you're wondering what the problem is, let me explain. The US dollar has lost 97% of its purchasing power since the Federal Reserve was created in 1913. Your $10,000 10 years ago is now able to purchase $2,800 worth of goods today. This all started back in 1971 when President Nixon took the dollar off the US gold standard. Now if you're wondering what the gold standard was, the gold standard was a monetary system in which our currency was backed directly by a fixed amount of gold, ensuring that its value was stable and it was backed by a tangible asset. Since money was backed by gold reserves, governments couldn't print unlimited amounts of money. This helped control inflation. And since back in 1971, President Nixon took us off the gold standard, without the gold standard, we now have fiat currency. Fiat currency is money that is not being backed by gold or silver. This allows our governments to print as much currency as they want, leading to a reduction in the quality and value of our currency. And this can raise major concern as there hasn't been a single fiat system to last in history, dating all the way back to 64 AD in ancient Rome, where they would melt down their gold coins and they would pour in cheaper metals such as copper. This would allow them to create more currency and fund their mini wars. This cycle of currency creation led to massive amounts of inflation. This caused citizens to lose faith in the currency and would eventually lead to the demise of the Roman Empire. The funding of wars and public works is our same reason for printing more currency. If we continue down this path, we'll be in the same situation they were in ancient Rome and will eventually lead to the collapse of our entire monetary system. So you need to make sure that your money isn't sitting still and that you're actively investing and even putting your money and saving it in the right assets. This will ensure that you're not affected by our poor monetary system and that you're able to reach the level of financial freedom that you've dreamed of. Now let's take a moment to understand exactly how money is being created. Let's first start off with fractional reserve banking. For example, let's take this $100 bill. Let's say I take this $100 bill and I decide to go deposit it into my bank account. The bank will then lend out 90% of my $100. That's called fractional reserve banking, where they're not entitled to keep all of your money. They're actually allowed to lend out 90% of that money to a borrower. So once they lend out that $90 out of your 100, you're probably wondering to yourself, I still have $100 in my account, I'm not understanding. That is because they do something called a bank credit, where they will type in $90 into your account so it shows up. That's one form of currency creation. So which once was $100 in circulation has now turned into $190 in circulation. This process will continue to repeat itself as the borrower of that $90 will then, let's say they go buy a car or a house. Well then, the person that they're purchasing this car or house from will then take that $90 that they're receiving for selling said item and they will go deposit it into their bank account. Once they deposit it into their bank account, then this $100 just turned into $271 because this cycle will continue to repeat forever and ever. This actually leads to 95 to 97% of all money that is created in the economy. Now let's dive into the second way that money is being created. Let's say that a politician decides to promise things to his citizens for free, but they don't actually have the money to pay for the things that they're promising. So then the US Treasury will then issue a bond A bond is basically saying that I will borrow $1 trillion from you and I'll pay you back in 10 years plus interest. So then the US banks will then bid on these bonds at the open market committee. They're basically buying the US national debt so that they can then receive interest payments on the US debt. Later down the line, the bank will later sell these bonds to the Federal Reserve. And the Federal Reserve actually pays for these bonds with money that they don't have. They're issuing checks from an account that has a $0 balance. This is actually one of the many ways that our currency is being created, because the Federal Reserve has the power to issue checks and pay for bonds with money that they don't actually have. This is exactly how the government is putting a hidden tax on your money. You're trading your most finite asset, your time, your energy, your resources, for something that is infinite and can be created out of thin air. This excessive printing of money is leading to large amounts of inflation. This causes our purchasing power to decrease and our price of everyday goods to increase. This is because prices are like a sponge that soak up all the excess currency in our system. The more currency that is being created, the higher the prices rise and the less valuable our money becomes. Let's take this to the $100 bill again, for example. If somebody asks you, is $100 a lot of money? You would think to yourself, $100 is our largest value of denomination. But that's because you're thinking about the nominal value. What you have to think of is how much is this $100 circulating out of. For example, let's say that I have $100, but it's out of $1,000 in circulation. That's a lot more money compared to $100 out of a billion or out of a trillion. So you need to focus on not the nominal value, but you need to focus on how much money is actually circulating and how much money is it out of. Once you understand this key principle, it will really change the way that you look at money. I say all this to say, if you don't understand the problem in our monetary system, then you will never truly be able to value the solution of investing. It's a crucial solution to a problem where our government is continuously printing more and more money every day that's leading to large amounts of inflation in the debasement of our currency. By investing, this will help you protect your purchasing power and even grow your wealth. To add more context, the money supply is growing 6 to 8% per year. So if your money is sitting stagnant and you're still on the sidelines and your money isn't growing by 6 to 8% a year, then you're actually getting poor and your purchasing power is decreasing. So if you want to change the path of your financial situation and not be affected by our broken monetary system, in tomorrow's video, I'll be explaining how I was able to generate tens of thousands of dollars investing in the stock and crypto markets, and how you can do the exact same thing to ensure that your family's last name becomes an asset. For some of you, by the time you're watching this video, tomorrow's video may already be out. So if you learned anything new in this video and enjoyed what you learned and you're looking forward to changing the trajectory of your financial situation, then feel free to subscribe to get more content and information like this. Whether you're a beginner investor, an experienced investor, or somebody still waiting on the sidelines, this key information in this video will help you further understand our broken monetary system, and so you can value the solution of investing.